Right?
You're absolutely right. And our first guest actually believes we're still in a bear market, and he doesn't think there's any reason to think it will end anytime soon. Gary Kaltbaum is president of Kaltbaum Capital Management and also author of Investor's Edge and Trend Watch. Gary, I want to play a clip from the last time you were on about a month ago and get your reaction to it. Let's roll it.
We have $16 trillion in debt, Charles, and that crowds out the private economy, and that scares the willies out of the decision makers at major corporations as well as small business. And that's why you're seeing unemployment not getting off its back, employment getting better. And to me, that's where all the worry for big bear market comes from.
So, Gary, none of those things have really changed. None of those things you were highlighting for your rationale for being bearish, and yet the market's made a huge bounce, and I read your notes almost every day. I know you've been participating in it. So why have you been buying in this bear market?
First off, what a handsome guy I am. Very good clip.
I thought you were going to say what a handsome guy I am, but go ahead.
Well, of course you are. Look, Charles, during all kinds of phases in the markets, you're going to get rallies. It's as simple as that. And I saw Monday the market support really held. And I think Wednesday, for me, there was some confirmation that the worst of this move down is over. So I started buying a little bit. But I got to tell you, I've already started selling a little bit also because I don't think there's a lot of big upside from here. So while I think a low has been put in for now, and I think for the next few weeks, the upside I think is limited. And here's why. And you guys said it best. The new high list right now, you have a bunch of dollar stores. You have utilities. You have names like Coca-Cola and Kimberly-Clark. These are AutoZone, a auto parts retailer. These are classic defensive issues that are worried about the economy. And of course, you know I am also. I think this move was based on a lot of people getting bearish, strategists lowering their targets for end of year this week, just so happened this week. And B, the Fed. They're now getting involved with all the other Fed heads around the country and Europe, and we have that meeting next week, and I'm 100% sure they're going to come up with some cockamamie idea next week that'll try to goose the markets, and maybe they'll be successful, maybe they won't. But I think for now, we've hit a low. I just think the upside's capped.
Gary, you have some great do's and don't tips for our viewers, and one of them I know is about understanding the characteristics of this bear market, because they apparently are a classic signal of what's happening during this bear market pattern. Explain what that means to our viewers.
I was taught many years ago by a gentleman by the name of William O'Neill, who is the editor and owner of the Investor's Business Daily, that in bear markets, your rallies are the sharpest. And I think we're getting one now, and then they're quick, and then they start burying you soon after. So you got to be very, very careful of that. But the most important thing is that you got to be careful about listening to what I consider to be quote unquote Wall Street. They're always telling you, don't worry, everything's okay, think long term, it'll come back. And I just remind viewers that from the year 2000 today, you have stocks like Merck that are still down 65% from 11 years ago. And of course, you have all these great financial companies, obviously not so great, that are never ever coming back. They went to zero. Always manage your positions. Always watch what you're doing. And it's great to hold things long term. It's fantastic. Just make sure what you are holding long term is working. You know, right now, and I keep talking about Apple and Amazon, these stocks continue to work amazingly so. And as long as they continue to work, you stay with them. But you see what happened with Netflix in the last few months. That sucker is done. Research in Motion, one of the strongest stocks in history in this past few years, is dead on arrival now. So always be managing what you got.
Right. So, because a lot of stocks you like are classic momentum stocks, and so are they. And they go straight up, and then they come straight down. Gary, before I let you go, do you find something here a little bit sort of a conundrum in the sense that this market rallies on weird bad news, the sense that all the central banks are going to bail out Europe, the sense that Bank of America is selling all of its assets, and these are the things we rally on. Is it possible for this market to ever rally on good news?
Well, let's hope we get it. If we get some pro-growth policies, look, I've always said there's nothing wrong with American corporations and American workers. I think there's a lot wrong with Washington, and you talk about it very well every day on TV. If we can just get rid of these people and just let us be, I think we can be off to the races again, but obviously that's not happening just yet. Amazing this whole week that the news was we're going to create more leverage in debt to fix a problem in debt in Europe, and that helped the market. Next week we'll have a little bit more money printed printing. That's supposed to help the market. Longer term, that's not good stuff.
More debt and more money printing. Sounds like a dangerous game we're playing. Thanks a lot, Gary Kaltbaum. Great as usual. Appreciate it.
My pleasure.
For like 2 seconds, I thought he was going to turn bullish on
For a
us.
second
He said,
there, right?
I'm buying. Oh, wait, and then I'm selling. All right. Well, we'll have much more on the market coming ahead on this hour. Smart Money's Jack Howe says that there are mixed signals about